Israel just struck Iran. Oil is surging. Bitcoin dropped back below $63,000. And this morning, markets across Asia are bleeding. This isn't panic. This is a convergence. And if you don't understand what's actually happening right now, you are flying blind. Stay right there. What is up, everyone? Welcome back to the channel. If you're new here, this is where we break down the crypto and stock market every single day. No fluff, no noise, just the data you need to navigate these markets with confidence. Today is Monday, June 8th, 2026, and I need your full attention because what happened over the weekend is not a normal market dip. This is a perfect storm. 4 separate forces hit the crypto market at the same time, and together they've wiped out more than $250 billion in total crypto market cap since late May. Bitcoin went from $82,000 in mid-May to hovering around $63,000 this morning. Ethereum is sitting near $1,600. XRP is down over 5% in 24 hours. Solana dropped to the $66 range last week. By the end of this video, you will know what caused this, what the key price levels are, and what the data suggests comes next. Let's get into it. Okay, first, let's talk about what broke this weekend, because this is the immediate catalyst that's keeping Bitcoin pinned below $63,000 today. On Sunday, June 8th, this morning, Israel's Air Force confirmed it struck military targets in western and central Iran. This came in retaliation for Iran firing missiles at Kuwait and Bahrain on June 2nd. Iran called its response, quote, warning strikes. Israel called it an act of war, and the ceasefire that had been holding since April, it is now officially over. Here's why this matters for your crypto portfolio. Anytime there's a military conflict near a major oil-producing region and a critical shipping choke point like the Strait of Hormuz, capital runs. It runs out of risk assets, stocks, crypto, and into safe havens. Gold, the US dollar, oil itself. And that is exactly what we saw. Oil jumped over 3% this morning. The US dollar index, the DXY, climbed back above 100. And Bitcoin, which was attempting to build a floor after last week's sell-off, got hit again. Bitcoin briefly touched $64,128 on Sunday during a short squeeze. Then news of the fresh Israeli strikes hit, and BTC dropped right back below $63,000. Here's the thing though, and stay with me because this next part is critical. Geopolitics is only one of 4 forces battering this market right now. The real story is what was already broken before the missiles flew. Let's call this what it is, a convergence crash, 4 forces all hitting at once. Force 1, the Federal Reserve turned hawkish. Earlier in 2026, the market was pricing in rate cuts. That liquidity expectation acted like rocket fuel. Bitcoin ran from the mid-60s to $82,000 by mid-May. But then the Fed signaled it wasn't cutting anytime soon. No rate cut liquidity. No fresh money flowing into risk assets. The fuel got cut off and the market stalled. Force 2. Strategy's Bitcoin sale shattered sentiment. Now this one is fascinating, because in pure financial terms, it was nothing. Strategy, formerly MicroStrategy, Michael Saylor's company disclosed it sold just 32 Bitcoin between May 26th and 31st for about $2.5 million. They still hold over 843,000 Bitcoin. The sale was a rounding error, but the symbolism was enormous. Strategy built its entire brand on never sell. Saylor was practically a Bitcoin deity. The moment that changed, even by 32 coins, the market asked a very dangerous question. If Saylor is selling, what do they know that we don't? That question, in an already fragile market, sent Bitcoin below $71,500 on June 1st. Over $90 million in BTC futures positions were liquidated in the hours that followed. Force 3, ETF outflows hit a record streak. Institutional demand has been drying up. We saw a record 13-day consecutive outflow streak from US spot Bitcoin ETFs. Over $4 billion pulled out. That is the institutional bid gone. When the buyers who move the market and start walking back out, price has to follow. Force 4, the geopolitical shock, which we just covered. Iran, Israel, oil, risk-off sentiment. Bitcoin below $63,000. When you combine all 4, a market that had accumulated massive leverage, open interest at cycle peak levels, funding rates hot, long positions stacked to the ceiling, gets absolutely wrecked. That's how you go from $82,000 to $62,000 in roughly 2 weeks. That's how $1 billion plus in liquidations happens. That's what a convergence crash looks like. Now, here's the question everyone is asking, and the one I know you came here for. Is this the bottom? Let me give you the levels. These are the numbers that matter right now. Bitcoin, BTC, support $60,000. This is the psychological and structural line in the sand. Prediction market platform, Calgi, currently has an 80% probability of Bitcoin falling below $60,000 at some point this year. That doesn't mean it happens tomorrow, but you need to know that number exists as a downside target. Resistance, $64,000 to $65,000. Bitcoin hit $64,128 on Sunday and got rejected. That's your first ceiling. Above that, watch $68,000 as the next major hurdle. The good news? Research firm 10 Times Research called Bitcoin technically oversold after last week's sell-off. Bitcoin closed the week above the 200-week simple moving average, a level that has historically marked major cycle turning points. Analysts are watching this closely. Also watch, Michael Saylor hinted on X at a potential new Bitcoin purchase, posting his classic adding more dots chart. If Strategy announces a buy, that's a sentiment reversal trigger. Ethereum, ETH. ETH was last trading around $1,663. It's down over 10% in recent sessions. The $1,500 level is the critical floor. If ETH loses that, altcoins broadly are in serious trouble. Watch it. XRP last at $1.12, down nearly 6%. No clear catalyst to reverse short term. Needs broader market stabilization. Solana, SOL, was trading around $66. Technically weak, the $60 area is next support if macro pressure continues. One more thing. Arbitrum is having an on-chain governance vote today, June 8th, for a $43.5 million treasury allocation. It's a small thing, but it could nudge layer 2 sentiment one way or the other. Keep an eye on ARB. Adobe reports earnings on June 11th. Apple's WWDC keynote kicks off today. AI announcements could swing tech stocks and influence risk sentiment across the board. The crypto recovery remains elusive as the market also watches for SpaceX and Anthropic IPOs on the horizon. Bottom line, Bitcoin is at a critical juncture. Oversold technically. Structurally supported at the 200-week moving average. But geopolitical risk is live. ETF demand is weak, and $60,000 is the real test coming. Let me bring it all together. Bitcoin is below $63,000 this morning, not because of one thing, but because of 4 things hitting simultaneously. A hawkish Fed, Strategy's symbolic sell, record ETF outflows, and now a fresh Israel-Iran military exchange. The market is oversold. The 200-week moving average is holding for now. But $60,000 is a real downside risk, and traders on prediction markets are pricing it at 80% probability. Watch $64,000 resistance on the upside. Watch $60,000 support on the downside. Watch for any new strategy purchase announcement that could flip sentiment fast. This is not the time for panic. It's the time for precision. If this video helped you make sense of a chaotic market, do me a favor and hit that like button. It helps this channel more than you know. And subscribe so you don't miss tomorrow's update, because this situation is moving fast. Drop your questions in the comments. I read every single one. I'll see you in the next one. This is not financial advice. Always do your own research.